In this video, I'll cover the accounting concept of the accounts payable subsidiary ledger. As a reminder, the accounts payable account is used by accounts to record all vendor purchases for goods and services purchased on credit. Every time we record a purchase, we debit purchases and freight in, if applicable, and credit accounts payable if the purchase is on credit. It would be quite difficult to look at the general ledger account and quickly tell what invoices are still open and must be paid. That's where the accounts payable subledger comes into play. The accounts payable subsidiary ledger is a detailed record that contains the individual transactions related to accounts payable, separated by vendor. The subsidiary ledger breaks down the total accounts payable into individual accounts for each vendor. Subsidiary ledger, often called subledger, is used when the general ledger accounts have a very large volume of activity that cannot easily answer the questions the business has. Imagine that a business records all accounts payable transactions to its accounts payable general ledger account. How quickly could you answer the following questions? How many invoices did we receive from Sportsman, Peloton, and Shirts and More? How much do we owe each vendor? What invoices make up the balance of $72,036? You could probably export the data from the accounting system and use Excel to filter or prepare a pivot table. But could you still answer these questions if you had hundreds of accounts payable transactions every single day over multiple years? Probably not. That's why businesses use subsidiary ledgers, and they're most frequently used for accounts payable and accounts receivable accounts. Think of the subledger accounts as the file folders in a cabinet drawer. You can quickly see what the business has purchased from each vendor, what returns were made, and what invoices were paid. So what exactly do accounts do to record the transactions? Let's look at that next. Just keep in mind that these steps are pretty much automated when using an accounting software program. However, you still have to know how the system is supposed to work and troubleshoot problems or resolve variances. So let's look at this process step by step. We'll start with Max Out Sporting Goods purchasing products from Modern Sportsman for $720 with invoice 5201 on January 20th. Step 1 here is to record the transaction in the general journal with a debit to purchases and a credit to accounts payable for $720. Step 2 is to post the transaction to the general ledger by first debiting the purchases account 501 for $720 and crediting the accounts payable account 205 for $720. Now on step 3, the subledger comes into play, and we record the credit to the specific subledger account for Modern Sportsman for $720. In practice, you would receive the invoice from the vendor, like Modern Sportsman here, and enter the invoice into the accounting system by pulling up the vendor and entering the invoice number, type of product, and the total. The system is set up to know that each product is associated with a general ledger account. It's also possible that the company electronically receives the invoices and automatically interfaces the invoice information to the general ledger and subledger. That said, you need to be familiar with this process because you will need to be able to research any vendor inquiries or analysis of the purchases or assistance system testing. But back to our example here. Did you notice that the general ledger balance and the subledger balance are the same? In this example, we only have one vendor, Modern Sportsman. But even when we have multiple vendors, the total of all subledger accounts for all vendors should equal the accounts payable account. Let's expand this example and look at what happens when Max Out Sporting Goods pays the invoice. Max Out Sporting Goods pays Modern Sportsman for invoice 5201 with check 151 on January 29th within 10 days and subtracts the 2% purchasing discount. Step 1 here is to record the transaction in the general journal with a debit to accounts payable for $720 and a credit to purchasing discounts for $1440 and a credit to cash for the balance after subtracting the purchasing discount of $705.60. Step 2 is to post the transaction to the general ledger by first debiting the accounts payable account, number 205 for $720, crediting the purchasing discount account 504 for $1440, and crediting the cash account for $705.60. In step 3, the subledger comes into play again, and we record the debit to the specific subledger account for Modern Sportsman. Just in case you're wondering why Modern Sportsman, why Max Out is paying invoice 5201, but still has a prior balance of $1,600. It is possible that Max Out Sporting Goods missed the deadline for the early payment discount for that invoice and is waiting for the full net 30 days to pay that invoice. Here's another example. In this exercise, we're supposed to post journal entries in the general journal to the accounts payable account in the general ledger and to the appropriate accounts in the accounts payable subledger. Below, we have a total listing of all vendors for this company, Geek Auto Supplies, as of January 1st. Then it tells us that the total accounts payable are $7,600 and that the subledger has accounts for Evans Enterprises, $1,600, Southland Distributors, $4,100, and Taurus Company of $1,900. $1,600 plus $4,100 plus $1,900 equals $7,600. Next, we have the general journal with two transactions dated January 8th and January 10th. The January 8th transaction is a payment for Southland Distributors with a debit to accounts payable and a credit to cash for $410. The January 10th transaction is a credit memorandum with a debit to accounts payable and a credit to purchases, returns, and allowances for $200. Below that, we have the general ledger account, accounts payable, and next to that, the three vendors subledger accounts. One for Evans Enterprises, one for Southland Distributors, and one for Taurus Company. The first step is to enter the beginning balances into the general ledger account and the subledger accounts. So $7,600 into the general ledger account for accounts payable, $1,600 into the subledger account for Evans Enterprises, $4,100 to Southland Distributors, and $1,900 for Taurus Company. It's easy to make a mistake, so double check your numbers by adding up the amounts from the subledger accounts and make sure that it equals the general ledger account. Next, we post the journal entries to the general ledger. In this exercise, you're only asked to post to the accounts payable, general ledger account, and the subledger accounts, but of course you would also post to the other general ledger accounts that are part of the journal entries. So for the January 8th transaction, there's a debit to accounts payable for $410 for Southland Distributors. Let's post that here. We first go to the accounts payable count and write the date, and then the debit of $410 into the accounts payable account. And then a credit to the cash account, which is not shown here. Then we go to the subledger for Southland Distributors and write the date into the date column and post the debit of $410 to the subledger account. The January 10th transaction, there's a debit to accounts payable for $200 for Evans Enterprises. So let's post that next. We first go to the accounts payable account, write the date into the date column, and then post the debit to the accounts payable account and then a credit to the purchases, returns, and allowances account, which is not shown here. Then we go to the subledger account for Evans Enterprises, write the date into the date column, and then post the debit of $200 to the subledger account. Let's double check that we've posted the accounts payable transactions correctly by preparing a schedule of accounts payable. The schedule of accounts payable is a summary of all subledger accounts, and the total must equal the accounts payable general ledger account. To prepare the schedule, we write the name of the company on the first line, followed by schedule of accounts payable and the date. Next, we write the vendors and the ending balances. So here we have Evans Enterprises for $1,400, Southland Distributors $36.90, and Torres Company for $1,900 for a total of $6,990. In practice, you would run a vendor report in your accounting system to view all ending balances for all vendors and then compare the total to the general ledger balance for the accounts payable account. You would think that it would always match because the company is using an accounting system, but that's not always the case. I've spent my share of time on researching why the general ledger balance did not equal the subledger, only to find that someone booked a GL entry to the accounts payable account without tagging the vendor. Hope you enjoyed this video and the overview of the accounts payable subledger and how to post these type of transactions.